Welcome to Venture with Joe and Cody, where we take a deep dive into the minds of leaders and innovators making a real impact today. I'm Joe.
And I'm Cody. And we're here to bring you the raw stories, the successes, and the setbacks that these trailblazers have experienced in their journey to where they are today.
Every week, we sit down with a new guest who's ready to share their insight and advice on business, entrepreneurship, and making a difference in their community. From local community members to industry experts, you're going to get the unfiltered truth behind their success.
So whether you're an aspiring entrepreneur, a seasoned professional, or just curious about the business world, join us for a journey of learning and inspiration.
So let's grab a drink, settle in, and let's get started. This is Venture with Joe and Cody. Hey guys, welcome to another episode of Venture with Joe and Cody. My name is Joe Skipper. I'm the owner of Skipper Realty Group, brokered by eXp Realty in Oregon, and I'm with my buddy Cody Wilhelm with Residential Mortgage. And we are having technical difficulties. We've tried recording once and it went off. Your audio is not doing great.
No.
So yeah, we're gonna try this again. If it doesn't work, we just need to try another day, I think. So
yeah.
It's just not meant to be.
Is it Monday or what?
Yeah, I don't know. Maybe the Friday isn't just as bad. We're just mentally checked out. Our equipment's mentally checked out and ready for the weekend. So we're gonna see. It's lasting longer than it did last time, I think. I think we're already past the point of when it cut out last time.
You know what? That's a win. Let's wrap it up.
It's been great talking to you guys, and we'll chat with you later. So hey man, we were talking about, God, my mic is loud. We had been talking about a little bit about, having us just kind of be on, just talking on Venture. We love having the guests, and we will still continue to have guests. But I think, the people, want to hear what we have to say, or at least we think that they want to hear what they want to hear. That
the demand is there.
So anyways, we'll do a lot more episodes. I think it'll be fun to kind of get together and kind of just talk about whatever. We'll have a general track we'll go on and kind of start off on that track. But hey, whatever happens. And I think that's the best way to go. That's the podcast I like to listen to, is the ones that kind of ad lib and just learn, what's going on in various parts of life and the business world.
Yeah.
We'll kind of try to keep it focused on things. If you see me looking over, it's
as much as we can.
My dog here, Margot, is here, and
she made it.
Hey. She's actually trying to eat something right now, so I might have to get off in a second. But
that's all right.
Not get off. I'm just going to go grab it and take it from her.
Just let her eat it.
Yeah, I don't even know what it is. It's like some little black piece that she's like, I'm going to take that. It's probably the important part of your audio that you needed.
That's exactly what I was thinking. Yeah.
But
that's where it went. Thanks, Margot.
Yeah. So today we were just we're talking about, it's the beginning of the year, so I just wanted to kind of go over what predictions are, how the 2024 went with you guys and rates, what you saw, what we think we're going to see in the future, and kind of go from there. So kind of start us off with kind of what 2024 had and what you're kind of thinking on the mortgage side of things of, for buyers and sellers out there, what is everyone predicting? Granted, they're all wrong, but go ahead.
Right. Yes, myself included. But yeah, like 2024, we kind of saw a lot of the same from 23. There was definitely an increase in purchases. Saw things that kind of started to normalize a little bit. As far as interest rates go, we never really saw much that sustained for longer than, say, a couple weeks or maybe a month of rates going down. As soon as they did, and it felt like, hey, we're finally there or getting there, they went back up. So, overall, the interest rates were down in 24 from what they were at in 23. So that's good. I don't think it was what everybody was hoping for, was going to be like this big change, but I think the biggest thing from my side of it is they're no longer just going up, because we experienced that for the first, year and a half, where it was just like, man, it just never seemed like it was going to stop. So we've at least seen it level out, and if anything, we've seen it come down some. Towards the end of the year, we had like some really good momentum that was exciting, and then it kind of got erased in late November and then throughout December. Last few days here now, what are we, January 17th? We have seen some good improvements, and I don't know exactly what all. Part of it is the CPI numbers that have come in. Inflation is still kind of seems to be our main barrier to getting the mortgage rates lower. We did see in 24 the Fed reduce the short-term rates by 100 basis points, so essentially 1%. So that was good, but as far as that impact on the mortgage side, it really didn't have much of an impact. And I think, the main reason that we saw rates go up towards the end of the year, even when the Fed was lowering the prime rate, it was because they're all basing it on projections. And the Fed towards the end of the year said, "Hey, maybe we're going to kind of hold tight," rather than, prior to that, the expectation was that they are going to potentially do 3 to 4 more cuts in 25. And then they came out saying, maybe we'll get two. We'll just have to kind of see where it goes from there.
So
If you want lower rates,
you guys predicted then. So I was going to ask you, generally it goes along with the Feds doing the
Mhm.
cuts. It's
Yeah,
not directly involved, it's not directly, but but what you're saying is you guys had already, I was going to ask you, did rates change because the Feds cut? I was going to say it seemed like they didn't, but they actually did, because you're
they
saying
did.
that they predicted these cuts.
Yes.
So anything that did lower, any rates that did lower, was already based on a prediction from the Feds, not like a reaction to the Feds, if that makes
Yes.
sense. Yeah.
Yep. And so that's one thing that can get kind of tricky, especially if people are paying attention to what is going on and
Yeah.
understanding that I heard that the Fed dropped rates today. Yes, they did. But the weird part is, for the mortgage side, that market, it gets factored in and kind of baked into the rates weeks, if not, a month beforehand, because they know. It's like when you see rumors of a football player that's unhappy
Yeah.
and
Yeah.
and wants to be traded. Like, where there's smoke, there's fire.
Yeah. You start hedging your bets and doing different things
Yeah, if
to
there's
adjust
if
to
there's a
that.
pretty strong feeling that
Yeah.
the Fed's going to drop rates next month, then the mortgage rates tend to kind of ease their way into it. Good and bad. I think the good part with it is when you have the flip side of that and rates are going to be going up. That sucks to have, like, one day they're at, say, 7%, and then tomorrow they're at 7.25, like,
Yeah.
out of
Yeah.
nowhere. So at least with this, the way that they do it, they kind of ease into it. But then by the time the Fed makes the announcement, that's when people think, oh wow, rates are going to get a
Rates
quarter
are going to
percent
get,
better
yeah.
now,
And it's already
when
done.
in reality they've already been getting better. So,
Yeah.
but a lot
Yeah.
of it
That's
is
like the
just,
average consumer, I think, thinks that. Like that,
yes,
just like sees, oh, the Feds are going to come out with rate cuts. I'm going to wait a little bit. And it's like, well,
yes,
the lenders have already
yeah.
done their stuff based on that future talk, right?
Yeah, and sometimes they get worse, because if they're planning that the Fed is going to drop, say, a quarter percent, and then in their announcement, some of those things that they said were not quite
Well,
as
not
maybe
true. Yeah.
aggressive as what was
Yep.
expected, and they're kind of like, okay, we're going to do this one, and we're just going to kind of hold tight and see. Then sometimes the mortgage rates get worse because they over predicted what the outlook was going to be. So
For
it's
sure.
it's not really something that I'm not obviously involved in it. I wish I was, because I'd be cutting those things quick.
Well, what did you find in 2024? What was the lowest rate that we had? Do you remember what the lowest rate was?
It was like 6.34, I think I saw,
Okay.
for the overall kind of average,
Okay.
which, you can kind of take that, say, that being the average. So you've seen some, and keep in mind, that's kind of like the overall general of all mortgage rates, more or less. So it's like, for FHA purchases, VA purchases, those tend to be quarter to sometimes a 0.5% lower than
Yeah.
conventional rates, and conventional rates are a little bit higher. So we did get down to where we were hanging out in that low six range, and it was nice, it was exciting, and then it kind of got wiped away. But we have seen, like I said, over the last couple days, I think we had jumped back up to 7.24 was the national average, and now we're down to 7.04. So we're making some good ground back. Um, but it all just depends on where you're at. Like, it's so hard to time it, because I have this conversation with buyers too, like, hey, here's what the rates look like. Do you want to get it locked in here? Here's kind of what I see or what I think is going to happen. But ultimately, it's up to you. And I just leave it up to people too, like, hey,
Yeah, for sure.
if you like to gamble, if you like to kind of play the market, then we'll see where this goes, unless I have a really good idea or indication of, this is, we've already seen 4 or 5 good days in a row. Like, we're kind of due for a little bit of a correction here, because all it takes is one little thing, and it's like, bang, now we
Yeah.
just lost all that ground that we made up. So in this market, in this rate environment, I tend to be a lot more like, let's lock what we have,
Yeah.
because the last thing I want to do, like, in a normal market, I'll fight that fight for them, because I
Mm-hmm.
I find it kind of fun. And a lot of times you can get a better interest rate or maybe get
Yeah.
them a credit back for the same rate. So it's a whole game. But in this crazy world right now, it's the risk is just so much greater than the reward. When it's normal, your risk really isn't too much because the rates don't typically tend to move a whole lot unless there's something big that happened. So
So what did you see like with just in general, like with business and stuff in 2024 as a lender? I know that a lot of lenders, have been kind of unfortunately dropping off the market
yeah,
uh, just because of how the market's been.
yeah.
And remind me to tell you something about that. Anyways, what did you? How did you see business? What was your struggles? What happened? What was good?
Yeah, there was a lot, and I don't mean that in a lot of business. I mean in the
Yeah,
sense of like there was a lot of struggles, a lot of people just I think in this environment too, people are easier to it's easier for people to just kind of back out.
hmm,
Like the little things are a little too tight as it is. I'm a little worried, and so people. I mean, I've had more people this last year probably than ever back out after being under contract for something really that's pretty minor.
yeah,
It might be an inspection thing and they're just kind of like, I'm not really sure, or whatever it might be, where it just felt like they were so very thin on the margin of error with their
yeah,
whole kind of life situation that it just was like, it's just too much. We're just going to rent for a little bit longer. With that being said, though, there's also more and more people that are coming to grips with everything and the understanding that it's just not changing it at the pace that we thought it was going to, or they already waited a year and it's just like, all right, well, we need to just kind of figure out a plan. We need to budget better. We need to make this happen. So I have been seeing more people that have been on the fence that are finally starting to just take that jump. I also saw more this year people doing cash out refinances that even though their interest rate might have been a little bit worse, taking out some of that equity to pay off debts.
yeah,
And, it's interesting when you go through that because most of the time when people are going to refinance, they want to lower their payment, which obviously, why wouldn't you want to? But in a lot of cases, even though they might be taking a higher interest rate, say makes their payment $200 more a month, but in reality, they're wiping out $60,000 worth of credit card debt and paying off a car. Net savings, yeah, their payment went up $200, but they're actually
yeah,
saving $1,000 a month because they wiped all those out of there. And then it's like, okay, this gives us some breathing room. And then now when rates come down and the rates are better, we can just do a standard refi and get our payment lower. Saw more of that this year than I was kind of expecting to, just because you're when somebody has even a 5% interest rate, you're not really expecting that they're going to want to take on 7, but it does free up a lot of that. And it's I hate to be casual with it because it's not anything to be casual about, but it's all about payment, right? Like if you're good with your payment, then overall, how many people are going to realistically pay off their home? How many people are going to be in that home for 30 years and pay it off?
not many,
And it's you.
not many.
Oh, I thought you said
No,
me.
no, no.
So
I'm
it's
not in
like,
that category.
yeah, it's like using it as an asset, right? Like it's the same thing as taking from your retirement to help get caught up on bills. And it's like, okay, yeah, I took $50,000 out of my retirement account, and that's going to take me a couple more, maybe that might take me 2 more years of working to do this, but it gives me the ability to not be struggling month to month. So the same thing with the home and taking out equity. So I think that will continue, especially as we see rates improve, because for a little bit there, I thought, there's not going to be a whole lot of refinances that come out of this because rates are only going to be at this level for a year or so, and then they're going to go down. But now, as we keep going farther and farther into it, there's that many more people that are definitely tighter. And when I was doing some kind of research, just looking over what projections are for 25 and what they're expecting, one of the big reasons for defaults for people and what their expectations are is because of the debt load. So I think it's probably maybe like the last resort for people, but it is still an option to be able to say, hey, you know what? We have all this equity here. Like, why are we drowning every month?
Yeah. when we could take some out.
when we could use this, right? Because it's either you're using that to buy your next house, or you're using it to retire, or you're using it to, it's an asset. So using it while you can, I think really is good. Not that everybody should just refinance, but
No, I agree. Man, if we could go over the stories of how many times we've used our rental for either cash out refinance, all
yeah,
sorts of
right.
things. We've used that rental for down payment on another home. We've used it for the remodel
Hmm.
of the new home. We've used it, and so we are well aware of the cash out refinance and
Yeah,
how
right.
beneficial that can be. But yeah, it's that's an interesting thought for 2024. People pulling out the equity that they have to
Yeah,
use to
it
pay down
surprised
some
me.
debt. Yeah,
Yeah, it
which makes
surprised
sense.
me
You
because
know, every prices are
totally.
high. Mortgage rates are high. Everything's just kind of
Hmm.
high, and so I can see how people would be doing that.
Yeah, especially when you look at, say a new car loan or whatever it might be, you know, $800 a month for your car loan, or you can increase your mortgage payment by $200 or whatever that number
Yeah,
might
and
be,
pay the
right?
car
And
off.
and you
Yeah.
pay some of those things off, and it's like, okay, yeah, it's not maybe choice number one. Ideally, you'd just be able to pay your $800 a month car payment, but since your mortgage is stretched out over 30 years, that impact is so much less
Hmm.
than your 5 year or your 7 year car loan.
Man, so
It
yeah,
works its
I
way through.
I was thinking back on 2024, and I guess you just go through it. Like you
Yeah, right.
just do it. And I there was a guy that was on either TikTok or Instagram or something, some expert in the industry, and he was like, for lenders and agents out there, I don't think if you're still out there and you're working, he's like, I don't think you realize what you went through. Like, he's like, 2024 was a very difficult year with a lot of people in our industry dropping off
Uh-huh.
because they can't keep the business going. So and it just kind of brought to my mind, I was like, man, I just, you just do it,
Yeah,
and you just work and you just keep trucking along. And
right.
thankfully, both of us are still here in 2025 and have, future plans and business plans to continue to grow. But man,
Hmm.
just it kind of brought to light how hard 2024 was for us, which in turn means that it was very hard for the average buyer and seller
Yeah.
as well. I think people got this in their mind that sellers are just sitting pretty. They have their 3% rate. Everyone's
Hmm.
happy. Buyers are fine, just kind of sitting on the fence. It's like it's been a little bit of a struggle economically for everyone. And I think, yeah, like I
Dude.
said, you just keep your head down and you don't think about it
Yeah.
until someone reminds you of how difficult it actually was.
Dude, it's very true. I saw something the other day that said the housing demand, and this was just, I believe, national. They didn't specify, but it
Hmm.
was just like a little blurb. The housing demand is the lowest that it's been since 1995.
Wow.
And so you see stuff like that because I completely agree with what you're saying. It's like you just kind of, all right, things are slow. What can I do to get busier? What do I need to do? And so you're kind of constantly just working at it and working at it, and you go through slow months, you go through months that are a little bit busier, but then you see certain things like that and go, oh, wow, this is like the least demand for people to buy homes in what, 30 years?
Yeah.
That's kind of a wild thing to think of because you think of, I mean, I've talked to plenty of people. I know both of us, we weren't in the business when everything crashed in 2008, but I've talked to a lot of people then that are still in the business now, and they're like, this is actually way worse than it was
Really.
back then because yeah, it was hard, but you had foreclosures and short sales and rates were lower. Like the economy wasn't doing good at all, but you still had enough people out there that were able to pick up those properties. And now it's like
Yeah.
this kind of tricky time where it's just there's, I don't know if there's ever like a good bad time, but it seems like from what I've heard, this bad has been really, really tough,
Really.
and I don't know. Yeah, I've talked to a handful of people that have said that like this is definitely the worst that I've experienced, and I've been in it for 25 years. And
Yeah.
it's like, well, that does make me feel better
It makes you feel
because
slightly
it's
better, like
yeah,
that you're not
right.
alone. Yeah.
Yeah, yeah. Like, oh, okay. Well, you went through that stuff, and you're saying
Yeah.
that this is a tougher environment. So,
Well, and it gives you confidence knowing that, we've made it through a tough time in our industry, and confidence knowing that
hmm.
we're still here, and still trucking along. So
Yeah.
it's good to experience it, because I think that, agents that get in when, at least speaking for real estate agents that get in when the getting's good, You always have that. Probably the same with lending is when rates go low and everyone's buying and selling, Joe Schmuck comes in and just starts making some side money, which is great.
Right. Yeah.
But to know you're not Joe Schmuck, like to know you made it,
Right.
to know you made it through, and you actually
Yeah.
have a business is nice. Like, not that I didn't think I did, but it's kind of that confidence boost that, hey man, this was worse than I thought, and that's good because my business was still growing and still doing well. Granted, we would like to,
Yeah.
do more, but
Sure.
but to hear that, yeah, we're still here.
Yeah. Well, and I think it sets you up, and I've heard a lot of people say this too. The people that make it through this time are going to be set up so much better
Mm-hmm.
when things really do take a turn because you've made it through. There's such a smaller amount of people in the industry, like you're talking about. I saw something. My boss sent me something the other day, and it was going through licensed mortgage loan originators since 2020, I believe it was. It was either 2019 or 2020, and it went over the last 4 years. And it started out like 2019 or 2020. Obviously, don't quote me on any of this because I
Yeah.
don't know my official numbers, but it was like 450,000 licensed loan originators that closed one loan
Wow.
through that calendar year, right? So it's like, okay, that's a pretty good number.
Yeah.
And then the next year it dropped, and the next year it dropped, and it was the projection for 2025 was going to be 100,000.
Wow.
So you went from, and that's loan officers, mortgage loan officers doing one transaction in that year. For anybody that's listening that's wondering, like, well, one transaction, that probably gets you by. No, one
No.
transaction is that's maybe going to pay your bills for the month. If that's the reality, you figure if that number is 100,000, there's probably that many more of those people that are going to get out as well. Because unless you're closing, say, at least 1 to 2 a month, unless you just have very little bills or you don't mind making more or less minimum wage, then it's just not sufficient. It's not enough income to do what you want to do. So, but it's interesting just watching that trajectory
Yeah.
continue to go down and down. And
Yeah, and
I'm
as
sure.
in business, like I kind of like it that I'm like losing my competition, but I do feel
Yeah.
for the people that, got in and thought they could and had the high
Hmm.
hopes. But I tell people
Yeah.
like new agents coming in, I'm like, you have to treat it like a business. I find more and more agents that come in and say, hey, I'm just like thinking about doing this. Like I have a full-time job. Like
Hmm.
how successful can you be part-time? I was like, you can treat it as a hobby for sure. You can get one, maybe
Yeah.
two deals, a year and be fine if that's what you want. But if you want to see the success of what you're probably seeing on TV of the real estate agents that are doing well, you have to
Hmm.
treat it like a business. And that's what's so hard with this industry is coming into it. It's such an easy entry. I think yours is harder. I think lending's harder to get into, more tests, more
Hmm.
rigorous demands and more rigorous like things. I feel like real estate, they, yeah, we have standards and things like that, but to get into real estate, anyone can pay $2,000 and take the course and pass the course. And you
Sure.
probably work the real estate agents that you've known that you're like, yeah, they just barely passed the course and they've
Yes.
done nothing
Right.
else. So it's an easy entry business, but it's like, man, you have to treat it just the same as you would a, shoe store you wanted to build, or you wanted to go into to build a Starbucks or a coffee shop, or like I find so many agents just go in, man, thinking of that money, like you were saying, one deal, like you can see the numbers, and everyone gets like
Hmm.
super number oriented of like, oh man, you make that much on one sale. I only have to make like 5 or 6. It's like, no, you're not factoring again, a business, the taxes, everything that goes out of all of this stuff, the brokerage commissions and all that stuff. By the time you get your final paycheck, it's not as much as you think. So,
Yeah.
but I think people see that gross income, and that's kind of the bragging thing on the agent side is like, I made
Hmm.
17 million in GCI. It's like, well, cool. Like the average consumer thinks you made $17 million, and that's
Yes.
absolutely false. Like
Right.
absolutely false. And
Yeah.
so, but agents come in saying, man, that agent like does it part-time and made 3 million GCI. It's like, okay, that's not much money. Like if you break
Right.
it down, that is not a lot of money. So yeah, just interesting that I don't know where we got off on topic, but just talking
Well,
about people in and out of the industry, I guess, like moving into the industry and out of the industry.
yeah, and I think that's interesting too because there's definitely that image, I think, for real estate agents, right? Like you guys just make all this crazy money and all you have to do is unlock the door, and if they
Mm-hmm.
like it, then you write up an offer, right? Like, sure, that sounds really easy. But what they don't see is all the work that it takes to get in front of that client,
For sure.
to retain that client. If you're listing a home, and I don't even know all the specifics, but like if you're listing a home, I know you're getting professional photography done, you're sending out marketing stuff. That's all being paid out of your pocket. And who knows? Like that seller could just say, hey, I think we're going to take it off the market.
For sure.
And then you've got all your taxes, you're driving around everywhere, you're paying for transaction. Like there's a lot of things that go into it. I think probably the same goes for anybody that's self-employed, right? Because it's like, they get to write off their truck and they
Yeah.
get to write
That's
off
so
all
cool.
these things. Yeah. But what they don't see is that person's working like 12 hours a day, and they're doing the bookkeeping, and they're paying all the taxes, and they're doing everything that they can just to pay themselves enough to where they can actually have a wage. Because
For sure.
man, that stuff goes quick. And I think just the expense of running a business, let alone the time and energy and everything that goes into it. And
That's what we see with
it's,
like our interview with Sean Batista is like people see the end result a lot more than they
Mhm.
see the work. Like no one sees the
Yeah.
work that's done to get to the end result. Not that Sean's at the end, but he's a very
Yeah.
successful real estate agent. And if you want to check out that, I think that's dropping pretty soon, if not now. But the interview with Sean Batista with the Batista twins, they have built a super successful luxury real estate market or business up in Seattle. But yeah, you tend to look at them and say, okay, they can do that. I can do that. And then you get
Mhm.
into the industry and you get slapped in the face saying you can, but you got to work. Like you got to put in all the
Yeah.
work. And generally people don't see the work. They see the result and think I should be there. Or Selling Sunset. People are like, do
Sure.
you watch Selling Sunset? I'm like, no, I don't, because it does
Uh-huh.
one,
It's
it's
just gonna make me
fake.
mad.
Like, and two, it's not realistic of what the industry is. And
Yeah.
so yeah,
Well, and
it
you
takes work
also,
to get through 2024 is what we're trying to
yeah,
say.
yes. And you also don't have, similar to me, I know some banks, if you're at a bank, you might have referrals from clients that have checking and savings accounts there. But for most of us, yourself included, it's being motivated enough to really treat it like a business, like you said, because you have to be motivated. You have to push yourself. There's nobody that's just feeding you leads like, hey, Joe, here's 10 people to call today. Sounds like they're interested in buying a house. Like, no, you have to be the one to get in front of those people. And I think that's one thing for both your and my industry that gets overlooked from people, especially when they're getting into it, because they see the work part of it and they're like, "Oh, I'm great with numbers," or I love talking to people." Well, that's awesome. That's definitely a big part of it, but you have to be able to go out and get those, because it's not
For
like you're
sure.
just getting a list dropped off on your desk every day of like, "Hey, here's a bunch of people to call. They're waiting for you."
For sure. And
And
it's a
that's
long-term game. Like it's not
it.
like, hey, 50% off these shoes or 50 come into our store
Yeah.
and, buy one get one half off. It's like you've got to nurture, and agents, like particularly real estate agents, you could not see a paycheck for 6 months. Imagine like not getting money for 6 months. Like be mentally ready for that.
Yeah.
Like, there's agents that succeed earlier than that, but the average I think was around 6 to 8 months being prepared to not make money. And then even when we're doing
Mhm.
good, the same as I do, there's times you have 2 or 3 months with nothing, like no closings. Maybe they're in the process, they're different parts of the funnel, and so you're
Mhm.
like, okay, like now what?
Yeah.
Like,
Yeah.
and so
Hey,
people all
honey,
see
when you're at the
this.
store, can you get some more top ramen?
Yeah, exactly. Get the bulk top ramen, please.
Yeah.
Like kids need to eat tonight. No, but it's an interesting game, but
Yeah.
yeah. Well, what do you switching over to like buyers and sellers, like what do you say to your
Yes.
buyers particularly like for 2025, like what's kind of the plan? Like what do you say to get to your buyers to say be ready for spring? Because everyone thinks that spring is going to be amazing. That's just kind of how
Mhm.
it goes in the real estate world. And so it's coming in. So what do you say to buyers that are like, "Hey, I'm thinking about it," but what
Yeah.
should they do?
You know, I'm telling people kind of like I always have, if the time is right for you, if you're ready to jump into this, especially if I've got them pre-approved already, then it's just a matter of like, are you comfortable with these numbers? Does this payment work for you for the next year, 2, 5 year? Like, plan ahead, make sure. I try to really make sure that people aren't stretching themselves too thin, because I never want to get that call. I have had a few people reach out over the 11 years that I've been doing this that have said, "Man, my payment is killing me. Is there any way that I can reduce this?" And that's not a great. I know that I didn't have anything to do with it, I didn't convince them to get into it or force them into it, but I think everybody at some point in their life has felt that. Like, I'm not really sure how I'm going to pay all my bills this month. And that's just an awful feeling. So I really try to stress that with people and make sure that their budgeting is good and dialed in. I mean, we all the loan programs, you can't exceed for the most part 50% of your income anyways, but that is gross income. So it's not after taxes. So really, if you go up to that max, you might be closer to 65% of your
Mm-hmm.
actual take home income. Trying to just make sure that people are comfortable with it, but a lot of it is just been kind of educating them on what the market has been and where it looks like it's going. And for a little while there, it was really kind of uncertain because it's like, man, I don't know, maybe rates are going to turn in the next 6 months. Now I feel totally confident and comfortable with saying, hey, this is what you really need to plan for the next, you know, handful of years, because we might not see rates come down that much. And so you have to really be comfortable with this payment. If they do come down in the next year or two, great. Well, I'll make sure to be the first one to reach out to you so you can take advantage of it. In the short term here, like, you really got to make sure. But I do have some kind of 2025 numbers that I wanted to share too,
Yeah,
which
go
kind
for
of
it.
goes into what I'll share with people. But um, I highlighted a few things here. So this is from the Mortgage Bankers Association. This is their forecast for 2025. They are predicting, keep in mind these are all predictions, that the mortgage originations, which just means a loan, to increase 28% in 2025. So that's an increase to 2.3 trillion. So in 2024, it was at 1.79 trillion, or that's what they're expecting it to be. They haven't gone through all the numbers yet. 28% increase, that's pretty big. If even if it comes out to say 20% or 18%, whatever that might be, that's still a really good sign for the housing market, for our industries and everything. The originations, again, meaning just a new loan, are forecasted to increase 13%. And which part was that? Oh, yeah. From 5.1 million. So it's going to go up to 6.5 million from 5.1 million loans
Okay.
done. So,
So
you're
increased
adding on
activity
it.
for sure.
Yeah, big time. And then here's kind of a little bit of their reasoning for it. So for the rates not coming down as quick as we thought. So this guy, Bratton Tony, whoever that is, says the economy has been stronger than what we were expecting, but they are expecting in 2025 that the job market is likely going to slow, and we're going to see fewer jobs added and the employment rate to increase from 4.1 to 4.7. So that's partially what they're thinking is preventing rates from coming down a little bit more. But typically, when we do see unemployment numbers go up, we tend to see the mortgage rates come down because it's
Okay.
like as the
Yep.
economy gets worse,
Kind of an
they're
inverse.
yeah, trying to kind of figure that out. Um, here's the real point. The MBA, Mortgage Bankers Association, baseline forecast for mortgage rates to end 2025 at 5.9% and remain close to that level for the forecast horizon. If you say we're at set an average of 7%, according to the Mortgage Bankers Association, they're estimating that we could see rates come down, to the high fives, low sixes by the end of the year.
Okay.
I will say, here's my disclaimer to that. The last few years, because I do like their information,
Yeah.
because I feel like it should be a pretty trusted source. They do revise it about every month, and the last couple years, it's like
They've
the
been
mortgage
revising. Yeah.
forecast, it just keeps going up and
Yeah,
up and
for
up.
sure.
So take that information with a grain of salt. But
That's why they have to stay paying attention to us, because
yes,
we'll keep them up to date on the
yeah,
rates as they revise their predictions.
absolutely, absolutely. But I mean, we do have, I think this next year, or we're already here, 2025. There is a lot of potential for things to improve, mainly just because there's a whole new uh, set of government, I guess you could say, which, depending, everybody's got their own political views, but I think that um, any change in government, there's always going to be some form of change, whether it helps or hurts. So I think that's where a lot of the optimism comes from is like, okay, well, here's a whole new set of potential rules and regulations and changes and outlooks on things. So we'll see what it comes out to. But
Yeah. Well, it's interesting. Like, I feel like the real estate market just changes so slowly. Like, I think this is coinciding with the election. I don't know it's correlating with the election, but like,
Mhm.
though rates, it feels like so long ago that the rates were 3, but it's like, I feel like we're finally just accepting the rates. I feel like for the last few years, it's always been maybe they'll go back. There was always a hope that they'd go back to this
Yeah.
unrealistic number. And I think that, and what I found, at least anecdotally with myself, is like in the clients that I have, is it's a long term, it takes a long time for the minds to change of buyers and sellers
Yeah.
to the changes in the market that happen month to month, year to year. It's so gradual. And I feel like and this is just a feeling of that people have just accepted it finally. Like
Mm.
for these few years, it's always been that hesitancy. There's always been like a tinge of anxiety of like, man, do I get in now? Like I could get in at 5% when it drops to 4. Like,
Yeah.
maybe what if it drops to 5? Like, it's at 6 and 6.7, but maybe it's going to be 5.3. Like
Mhm.
think finally people are stopping that belief. And I just think that takes time in our industry for that to change. It's quick to change the other way. Like if it dropped to
Oh
3,
yeah.
boom. But
Heck yeah.
coming back, it's like almost a slow breakup. Like it's like
Yeah.
maybe we'll get back together again. Maybe
Yeah.
we can work this out. Like, and so it's
Right.
just this. Yeah. Anyways, I just think 2025 is like the year that they're like, this is it. If we can afford 6, and even you guys, like lenders, are no longer talking, at least to me, you're always, the rate isn't important, but it's no longer
Mhm.
talking about like, hey, maybe it's going to go to 6.2. Hey, maybe it's going to go
Yeah.
to 6.7. Hey, maybe it might be 5.9. It's like you've said before, if you can afford it comfortably, just get
Mhm.
in. Because what we're seeing in my predictions, at least in the Portland metro area, is they're predicting a 2 to 3% increase in median or in home value in the Portland metro area. It's
Mhm.
that's a slower jump for us. Like normally it's been a higher jump, but it's a jump. It's an increase in value. So the values are not tanking with homes. So again, if you can afford a home, it's generally a good investment. If you choose the right place, the right home for you and your family or whoever you have, it's generally a good investment. And just playing around with these like 0.2% fluctuations in the
Yeah.
interest rate, I think we're all going away from that. Like, I think
Mhm.
it's a thing that you guys think of every single day, but rather
Yeah.
than you see on social media, I don't see that anymore of like that, like rates are hitting this or rates are hitting this, or we predict rates to be
Yeah.
this. It's like, if you can afford a home, get a home. Like
Mm.
if you want a home, get a home. If you do not want a home or can't afford a home, don't get a home. Like we're
Yeah.
tired of like the
Well,
predictions of, what rates could do.
right. Because that's the downside is it becomes so rate focused that that's one of the biggest key things. And obviously the rate has a big impact
Yeah.
because it
Yeah.
impacts what your payment is. But if you were to tell somebody, hey, this home at this price with this down payment is going to give you this monthly payment, and they were okay with that, then in theory, the rate wouldn't matter, right? But
Yeah.
then you tell them
Yeah.
the rate and they're like, oh man, that's higher than
Yeah.
what I
That's
thought
high.
it was going to be.
Yeah.
But it's like, well, your payment, you were good with the payment.
Yeah.
And obviously, as a lender, we have to disclose all that stuff.
For
And it's not
sure.
like we're withholding information, but it is interesting when I have gone through that process with people too. Like, hey, here's what your payment would look like. And they're like, oh wow, that's great. What's the interest rate on that? Oh, 7.25. Oh man,
Yeah.
really?
Yeah,
Dude,
maybe
I
we'll
thought that
wait.
it was,
Like
yeah, maybe we'll
it's
kind of wait. And it's like,
it's
well,
like yeah.
yeah, is it just because you don't want to tell people that you got a rate
Yeah,
that
I
was
know, I know.
7.25,
Yeah, I don't
or
want to tell
is
my
that
friends
payment
that
now?
have a 3%
Yeah,
rate. They'll be ashamed of me.
exactly. Yeah, but you don't really like nobody talks about what their car interest rate is. I bet you if you asked like 100 people, I could almost guarantee that maybe only 5 of them would know what their actual interest rate is on their car loan. They know what their payment is, but they're like, "Oh, I think it was like 4 something
Yeah,
or
yeah,
5. I'm not really
for
sure."
sure.
So,
Yeah, interesting game we play, but it does seem
it
like
sure is.
2025 is, maybe it's coinciding with the election, maybe it's correlating with the election, but it just seems like I feel like towards the end of last year, people were just kind of, at least the buyers and sellers that I talked to, even the ones that have the 3 to 4% rates are like, look,
Yeah.
selling is the same thing. It's like you have to sell when you want to sell. Like you could always, if it's an
Yeah.
investment property, maybe you could work on that stuff. But it's like your family gets bigger, your family downsizes, you get divorced, you break, all sorts of
Yeah.
things happen in life. So the reason to sell is not just the rates. So I think everyone's kind of doing that, but I do think the real estate industry takes time to do that. Like to go the negative way, it takes time for people to accept that.
Mm-hmm.
Anyways,
Yeah.
but yeah, predicting like decent, moderate growth in the housing market. The inventory levels will kind of increase. I think new construction is starting to kind of try to make up for the lack of housing. So we're kind of
Mm-hmm.
seeing I think it's a good overall trend. I don't foresee the market tanking, unless
Yeah.
barring anything crazy,
Right.
but especially in the Wilsonville, Portland metro areas, we're still seeing increases in pricing. We are
Mm-hmm.
seeing increases in inventory, slight increases in days on market. So again, people getting used to the days on market. Like, why isn't my
Yeah.
house sold in 2 weeks? Like, why isn't my house had 18 offers in 5? I still get people today that are thinking, why doesn't my house sell in a week? Like, and it's like
Uh-huh.
they're so focused on COVID when it was like that it's
Yeah.
very slow to say, hey, it's not bad to have your house on for a few months. I know that's hard to internally take. I would love to sell your house, in a week.
Yeah. Right.
But buyers are slowing down. They're taking their time, and so in turn, days on market are increasing. But again, yeah, I think people again are getting used to that too. The days on market, they're like, okay, I just got to be patient. This is how it used to be,
Right.
when rates are more or less normal. So
Yeah.
yeah.
Yeah. No, it
Anyways,
definitely happens. People have very long-term memory of big housing events, whether that's low rates, high rates, low prices, high prices. It's like, oh, that why is it so different now?
for sure.
You're like, well, because that was, it's also crazy to think that COVID 2020, like all that, dude, we're like almost 5 full years away from the beginning of COVID. Like
Hmm.
that's crazy to me, right? But like
Yeah.
it felt like it was just a year ago or 2 years
Yeah.
ago. But it does. I think everybody's just the reality of
For sure.
time just doesn't quite happen like we think it does.
Hmm. Well, not to put you on the spot, do you have a newsletter? Like, do you do it for your clients?
I do, yeah.
Okay.
I
I'm not.
kind of just started it like
Okay.
towards the. I think I put a couple of them out so far.
Okay. I'm doing a pitch. That's why I ask. But I do think like, for people that are listening and wanting to pay attention to this market or thinking about getting into the market, I do, both Cody and I both do newsletters, him on the lending side, I do it on the real estate side. So if you are
Mhm.
interested, shoot us a text or drop a comment with your email below and we can kind of hook you up with that. But I do think it's good and important
Yeah.
to stay in the market. This is one of your biggest investments that you're going to make in life. One of the biggest purchases, if not the biggest purchase you'll ever make in your life. And so I think it's important to stay involved in it. And Cody and I can keep you up to date with that as you go through your different processes.
Yeah, and I've heard, I've received yours and yours are great, really good, informative. I have heard though from a lot of news sources that mine, even though there's only been a couple of them that have gone out, it's trending as one of the best newsletters in
Yeah,
the world.
yeah. It's
So
funny,
I
and
don't know.
I'm not just patting you on the back, but I do enjoy your newsletters. I get a lot of newsletters from
Oh, thanks.
lenders, but I do enjoy yours. Yours flow smoothly and easily.
I'm trying to just keep mine like kind of simple and
Because the
I
average
don't know.
person doesn't get into all the stuff that you guys get into.
No.
And so when you get too detail oriented, everyone's like, okay, that's cool.
Yeah.
But yours are pretty
Yeah.
simple to read and easy to read. So
Well, I'm a very simple person, so it's about as much that can come
that's
out
why
of
we
my
get
brain.
along. That's why we get
That's
along.
right.
But yeah, shoot us your email and get on Cody and I's email newsletter, and we can send you out the stuff that's going on. My suggestion as your real estate agent or hopefully real estate agent in the future is to get with a lender like Cody to get pre-approved now. If you're looking in the spring market, get pre-approved now. It's simple. It's easy. You don't have to
Hmm.
marry Cody. Just get it. Just get it so
Just,
you know what you can
yep.
afford at these rates. And Cody has so many
I'm
programs.
already married.
Cody has so many programs. There's lenders out there that have other programs, but Cody's got some great programs that can get you into a home that you might not think you can get into. So if you're thinking about it, get pre-approved. Your agent will appreciate it.
Yes, I completely agree. I appreciate that. But even if it's not with me, I obviously would like that. But yes, step one, get pre-approved. Because Joe, you can probably attest to this. It's nice when you're showing homes and you're going through all this process to know that they are taken care of rather
for
than
sure.
get their hopes up and it's like, oh, you haven't
And
been
then you can't
pre-approved
afford
yet.
that.
We need to,
For sure. For sure. Well, cool, man. If you guys like our stuff, subscribe to Venture with Joe and Cody. We're on Apple Podcasts, Spotify, all this stuff there. We do our stuff on YouTube as well. So it was good to talk to you, man. And I guess
Hey, you
until
too.
our next episode, have a good one.
Yeah, you too.
Okay, we'll
See
talk
what
soon, man.
happens. All right, see ya.
Okay.